Hi, it's Ty the Real Estate Guy here in the great state of Utah with a video for those of you who'd like to pay off your mortgage early. There are loads of tips, tricks, and hacks to pay off your mortgage early, and in today's video, I'll be sharing them with you. By the way, if you'd like to stay up to date on the latest home building and real estate tips and trends, subscribe to my channel below and ring that little bell to be notified each time I post new videos. There are so many wonderful advantages to owning a home, but the large debt and that annoying monthly payment can really weigh heavily on your mind. After 15 plus years in the real estate industry, I've seen some pretty incredible things happen and witnessed some unique ways people have used to pay off their house early. So this video is going to focus on the many different things you can do to pay off your home quickly, and some of these tricks are creative. For many of you, paying off your house early is your number one goal, and why wouldn't it be? On a $300,000 house, you could easily pay $200,000 in interest to the bank for the privilege of borrowing their money. By paying down your mortgage quickly, you will easily save tens of thousands of dollars and potentially over $100,000 in interest that would normally go to the bank on a 30-year mortgage. But for many of us, paying off the house or removing that monthly expense is the difference between being able to retire instead of working several more years for the man or the woman. I mean, could you imagine a life without a mortgage payment? The things you could do with all that extra cash? Before we get too excited or put the cart before the horse, there is a quick disclaimer. Even once you pay off your house, you will still need to pay property tax and insurance forever, or at least as long as you own the home. So even after you pay off your house, you still need to give the government their fair share. Many think this is wrong, but property taxes do pay for important things like your local schools, police, and fire departments, among other things. Remember, there are two basic ways to pay off your house sooner. You can pay more towards principal, or you can make payments early. In this video, I'll give you 13 different ways you can do this. Before you start applying every last dime towards paying off your house, you may want to consider if it's even a good idea to pay off your mortgage early. To add to your education on this subject, when you're done with this video, you'll want to watch my video, The Pros and Cons of Paying Off Your House Early. Why? Because there are definitely advantages to not paying off your house early, and that video may open up your eyes. I'll put a link below. Also, before you get too aggressive on paying off your house, remember you should always have 3 to 6 months of living expenses in savings. Why? Because life happens. Your car might break down. You could lose a source of income. There will be home maintenance. And who could have predicted the COVID-19 coronavirus pandemic? Sadly, a lot of people are going to lose their homes due to the outbreak. And many of them could have avoided personal tragedy by following this simple principle. The number one most important thing you need to do is protect your investment by having plenty of cash in reserves, and then attack your mortgage. If you watch to the end, I'll share a bonus strategy that can quickly knock years off your mortgage. So let's get to it. Number one, don't buy more house than you need. For many of you, this advice is a little late, but one of the best ways to pay off your house quickly is to not buy a bigger or more expensive home than you need. A less expensive house will lead to a smaller mortgage payment, and that means it'll be easier for you to pay it off sooner. To protect yourself, go with a 30-year mortgage instead of a 15-year mortgage. Yes, you can get a better rate, but your monthly payment will be a lot higher on a 15-year mortgage. It's safer to have a smaller monthly mortgage payment in case hard times fall upon you, and then use one of the strategies below to pay off your house faster. Number two, pay down your principal. This is the easiest strategy to implement, and it's something that I do. Simply add extra money to your mortgage payment each month. If your payment is $1,500, pay $1,700 and let your bank know you'd like those additional funds to be applied to the principal. I like this strategy because if the money is tight one month, you could decide to hold off. But if you get a bonus at work or have some extra cash, you can just simply apply that to your principal, knocking years off your mortgage and saving you tens of thousands of dollars over the life of your loan. Number 3, use pay raises and extra income to pay down your house quicker. As time passes, for most of us, our salary increases. So instead of buying that fancy vehicle you've been dreaming about since you were a 12-year-old, apply that extra income toward your mortgage and keep your living expenses the same. On a similar note, you can chop years off your loan by making a large one-time payment. If you receive a large bonus at work, an inheritance, or if you've saved and find that you have a lot of cash in reserves, you can send those funds to the lender, asking them to apply that to the principal, and voila, years of your mortgage payment will just disappear. Number 4, make biweekly payments. This popular strategy is a simple way to knock 4 to 7 years off your loan. And this is how it works. To pay off your house in the normal time frame of 30 years, you make one full payment each month. That equals 12 payments each year. By making bi-weekly payments, you're doing 2 things to help you pay off your home faster. First, you're paying an extra payment each year. That's 13 payments instead of 12. But you're also paying down the principal a little sooner with each half payment. This is a popular option because many of us can do it and not really feel the impact of making that extra payment. Now, before I continue, can I ask a quick favor? Will you please give this video a thumbs up? I would appreciate that more than you know, and that thumbs up will help others see that this video is helpful. Thanks. Number 5, remove mortgage insurance. When most people buy a house, they can't afford to put 20% down, especially when it's their first home. If this is the case, you're being charged mortgage insurance, which for many of you is more than $200 per month. Sadly, I bet there's millions of Americans that have 20% equity already in their homes and they're still paying mortgage insurance. Keep a close eye on home values in your area and compare that to what you owe on your house. In hot markets, 20% equity can be achieved quickly, so be ready. Once the mortgage insurance is removed, keep paying the same amount, applying those additional funds towards your principal. If you have a conventional loan, removing mortgage insurance could be as simple as getting an appraisal to show that the home value has increased to the point to where you now have 20% or more in equity in your house. On an FHA loan, you may need to refinance. But when mortgage rates are low, like they are today, it could be a good thing. If you're not sure where you're at, but you think you're close, call your trusted lender. They should be able to help you out. Number 6, budget your money. I know that a lot of you just rolled your eyes. Admit it if it was you. I know budgets aren't fun, but it's absolutely proven to work. A budget will put focus on your money, and it will hold you and your spouse accountable. This will reduce the wasted spending, which in turn will allow you to pay down your mortgage faster. Number 7, get a side hustle. Many see this as extra work. For me, I see it as a great way to make money following my passions. My side hustles invigorate me and I get paid to do the things I love. Social media allows you to show off your talents and teach people. That's why I love YouTube. Yes, it can take years before you start getting paid, but sooner or later, if you're consistent, you can start to earn an income through any number of social media outlets. Do you like to make things, or do you have a great idea? Stop procrastinating and start building something that could free you from not only your mortgage, but also your 9-to-5. It has never been easier to make money in the history of the world. With outlets like Amazon, eBay, Fiverr, Etsy, YouTube, Instagram, and others, there's multiple places for you to share your creations and earn some extra dough. If you feel like you don't have any talent or any special skills, first of all, you do, but if you have a car, you could always just become an Uber driver on your free time. Honestly, there's no excuses. Number 8, use your house to pay down your house. Could you rent out a room, the basement, or another portion of your home on a permanent basis or while you travel? I know a family that has a home fairly close to a major ski resort, and they make so much money during the winter months that they spend more time out of their house than in it throughout the winter. You can also rent out space on your home site. Build a shed and rent it out as a storage space, or simply allow someone to park their RV, trailer, or boat on your property. Number 9, reduce your expenses. In other words, stop spending your money frivolously and look at things you can do to save money. Could you ride your bike or the bus to work? Could you cut your phone bill or cable? I cut my bill in half by switching to YouTube TV, and I still get all the channels I want. You could take a sack lunch to work instead of eating out, or find creative but fun ways to go on dates or family activities that don't cost money. Nature provides loads of fun and excitement for my family. Take a long, hard look at where your money is going and decide if it's more important than getting out from under that hefty mortgage payment. If you'd like to understand more about how money works, I'd recommend reading books like Your Money or Your Life, Think and Grow Rich, or Rich Dad, Poor Dad. Any one of these books could change your life, and there's loads of other incredible books to help you reduce your spending and increase your earnings. Number 10, downsize or move further from the city or even to a different city or state. Downsizing is my retirement plan. When it's time to call it quits, my plan is to sell the large home and move to a less expensive location in a much smaller home. Even if you're not ready to retire, this is a great plan to help you pay off your home sooner. Could you move to a less expensive area? Could you move into a smaller home? Either one of these decisions could have a huge impact on your ability to pay off your home sooner. Number 11, make payments sooner. This strategy actually won't cost you an extra dime. Simply make a half payment 2 weeks before your payment is due, and then make the second half payment at the time your mortgage is due. This is not an aggressive plan, but it will knock some time off your loan and in the end save you thousands of dollars. Also, don't wait to make your mortgage payment. As soon as you have the money, send it to the bank. The quicker you pay down the principal, the less interest you'll pay. In turn, you'll pay off your house sooner. Number 12, refinance your home. But don't refinance to a longer term. That would take you backwards. This works great for those who've been paying down their home for several years and can refinance to a 10 or 15-year loan with a lower mortgage rate, which often leads to a similar or even lower monthly house payment. But before you consider a refinance for any reason, be sure to watch my video should you refinance your mortgage. Number 13, use an amortization schedule. Let's say you want to pay off your home in a certain amount of time, like 10 years. Just Google amortization schedule calculator and then input your loan amount, your mortgage rate, and the number of years you're aiming to have your house paid off. The amortization schedule calculator will tell you how much you need to pay each month to accomplish this goal. It's that easy. Okay, so now it's time for my bonus strategy. This is a full-fledged assault on your mortgage. Would you like to pay off your home in 15 years instead of 30? There's a simple way to make double payments without breaking the bank. This is a great way to pay off your home super quick, maximizing the amount of money that goes towards your principal. To make a double payment, just add the principal due on the next mortgage statement to your normal payment with a note to the lender to apply the additional funds to the principal. This should be fairly easy to do at first because for the first several years, the percentage of your payment going towards principal is pretty slim. If you follow this strategy, you'll pay off your home in half the time. If your budget only allows you to pay an extra $200 to principal each month, that's fine. You can do that. But here's my best advice for paying down your mortgage quickly, if you can swing it. Set your phone calendar to go off every 2 weeks. Most people will set up the timing for this with the day they get paid. At that time, you'll make a half payment and apply extra funds towards the principal, whatever you can afford to contribute without breaking the bank. By combining these two plans, you could realistically pay off your mortgage 10 to 18 years early, depending on how aggressive you like to be. Okay, before I bring this video to a close, I feel a responsibility to mention one last strategy. This would be to not pay off your mortgage early, but to build wealth by investing in real estate instead. Yes, paying off debt is noble, but because your interest rate is so low on your home, paying off your home as quickly as possible might not be the best financial decision. If you want to maximize your earnings, you need to think like an investor. And as an investor, you can't pour everything into paying off your home, or you won't have any cash to buy investment properties. If you remember the 310 real estate strategy I've talked about in earlier videos, you only need to buy 3 properties over a 10-year time frame to become financially independent. Yes, you'll need to make some sacrifices, but the quicker you can acquire those 3 properties, the sooner you can retire. Think about that for a moment and consider this. Investing in real estate buys you days in the future that you won't need to work. I have other videos that explain this in depth, so I won't go over that right now. But if you're interested, you want to watch my video, The #1 Millionaire Secret to Building Wealth. I'll put links to my suggested videos below. When you're considering a mortgage payoff plan, you should also choose a plan that will allow you to put money into savings, so you can also purchase investment properties. Real estate has proven to be one of the most profitable and safest investments one can make. And I just want to make sure you understand that before you pour every last dime into paying off your home. Is there something in this video that really stood out to you as being helpful? If so, what was it? Please let me know by commenting below. If you have questions or if I left something out, please help the community by leaving a remark below as well. Sincerely, I want to hear from you. If you know someone who's looking to pay off their home early, be a friend by sharing this video with them. And please don't forget to hit the subscribe button below and ring that bell to be notified each time I post new videos. Also, you can find me on Instagram at Ty the Real Estate Guy. If you found this information helpful, please give me a thumbs up. Thanks for watching, and don't forget to ring that little bell below. It'll make you feel good.